Hey everyone, welcome back to Corporate Decoder, where we'll unpack the financial secrets that keep companies running. And sometimes, not today, we're diving into Lument Finance Trust, Incorporated's latest filing. And let's just say their November activities might have some interesting implications for their future. So what exactly did Lument Finance Trust Incorporated, or LFT, get up to in November? This filing is a current report, meaning they're sharing significant news as it happens. Think of it like a company's Twitter feed, but for official purposes, they've got common stock, which is basically ownership in the company, and also some preferred stock. Specifically, the 7.875% series, a cumulative redeemable preferred stock, has a fixed dividend rate. That is pretty standard for these types of companies. Alright, here is where things get interesting. On the 24th of November, a subsidiary of Lument Finance Trust called Lument Commercial Mortgage Trust entered into an agreement to buy some mortgage assets. We're talking about over $135 million worth of loans. These loans are secured by properties like apartment buildings and a healthcare facility. Now, this agreement is a forward purchase agreement. This means they've agreed to buy these assets on a future date, the settlement date, which is set for the 10th of December. It is basically a promise to buy with the price set. This suggests they are actively acquiring new investments to grow their portfolio. Then, just a few days earlier, on the 21st of November, Lument Finance Trust announced they priced something called a Commercial Real Estate Collateralized Loan Obligation, or CLO for short. This is basically a way for them to bundle up a bunch of loans and sell them off as securities to investors. They did this through some of their subsidiaries. This is a common financial tool, and the pricing of it signals that they've gotten investors interested in their offerings. This allows them to raise capital and potentially manage their risk better. Let's circle back to that forward purchase agreement we mentioned. The key takeaway here is that Lument Finance Trust, through one of its subsidiaries, is making a substantial acquisition of mortgage assets. This shows a clear intent to grow its investment portfolio. The fact that the purchase price is the same as the unpaid principal balance plus accrued interest suggests it is a straightforward transaction, not a distressed sale, which is generally a positive sign. Acquisitions like this are crucial for a company like Lument Finance Trust, as their business is essentially about managing and growing a portfolio of financial assets. Now, about that press release announcing the CLO pricing, this is a really important part of their business model. By creating and selling these CLO-S, they are essentially securitizing their assets, which means they can free up capital to make even more investments. Think of it like someone selling off a piece of real estate they own to get cash to buy 2 more properties. It's a way to recycle capital and manage the size of their balance sheet. The fact that they priced it means they found buyers and set the terms for this financial product. It indicates a healthy market appetite for their securitized products. Looking at the bigger picture, Lument Finance Trust is actively engaged in acquiring new assets and also in managing its existing portfolio through securitization. This dual approach of buying and packaging suggests a strategy aimed at growth and capital efficiency. The mortgage assets they are buying are in multifamily and healthcare properties, which are generally considered stable sectors. The CLO itself is also tied to commercial real estate, reinforcing their core business focus. So, what is our take on this? Lument Finance Trust appears to be executing a clear strategy of portfolio expansion and capital management. Their recent moves indicate a company that is actively seeking to deploy capital into new investments while also utilizing financial instruments like CLO-S to optimize their balance sheet. The acquisitions are in solid sectors, and the successful pricing of their securitized product suggests investor confidence. Of course, any investment in commercial real estate comes with inherent risks like economic downturns or changes in interest rates, but these are standard for the industry. For now, these filings paint a picture of a company that is strategically building its business. Alright, that is our breakdown of Lument Finance Trust's latest report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.